Couple of earnings, and Concor has reported a rather weak set of numbers. That's the first quarter. We're joined currently by Anil Gupta, the CMD of the company. Hi, Mr. Gupta. Thanks so much for joining in. On the top line, we did see a bit of a dip of closer around 5% or thereabouts. Could you tell us what were the volumes in the past quarter? And also, I think earlier you had guided for around 14% top line growth. Now, in the first quarter, we've seen a dip of around 5%. Are you maintaining that guidance?
No. We had a very bad quarter. Of course, volumes did go up slightly, 2.8%. We had an increase in the international volumes. Overall volumes went up by 1.8%. But top line went down, primarily because of our leads going down tremendously. Our valuation was not in that. In accordance with this, our guidance is now revised to around 7.5% at this stage.
Okay, so
we feel that there will be recovery.
Okay, so the revenue guidance has been revised lower from 14% to 7.5%. What about on the volumes for FY17? Because I remember you had earlier guided for a 12.5% volume growth. With just 1.8% done in Q1 on a consolidated basis, what would be the fresh guidance and volumes?
Same. Actually, 7.5% will be both for volume as well as value. That is at this stage, we think.
All right. Mr. Gupta, could you help us out with what's the status in terms of the empty trains that were running? I believe that the empty running cost in the last year was more than 250, 280 crores or thereabouts. So in the last quarter, what was that number?
In last quarter, we've spent 50 crores on empty running in this quarter, as against 35 crores in the Q1 of last year.
All right.
So there was a 42% increase in the empty running. This was primarily on first, overall imports moved by us were larger than the exports, so there was a gap. Secondly, there were a lot of things which were moved from one port to another port. So some ports did very well in imports, other ports did very well in exports. So there was a lot of cross-port movement which resulted in these numbers.
Okay. You're expecting a pickup in your revenues in the coming quarters. Your margins are currently at 19.6%. Would the pickup in growth result in higher margins? What would be the guidance on margins?
Well, margins, we are expecting to be working with the EBITDA of around 19%, 19 to 20%. As margins will be under effect this year because there are a lot of challenges we are facing on the competition from road front. Road capacities are also idling, and therefore, despite diesel hikes which happened in between, road rates are not changing. So we have to be very cautious, and therefore our margins will not be able to enhance the margins.
Oh, all right.
So there will be a pressure on them. Yeah.
All right. So it appears there are some pressure points then going ahead, Mr. Gupta. But I want to understand what's the market share between freight versus road. What's it currently? Has it seen any kind of improvement in the first quarter?
Not really. We continue to carry around 15%. It's a total of 250 million ton of cargo which moves in containers in India today. We are moving around 15%. We are hoping that these shares will go up to around 20% by the end of this year, because we are expecting first of all this increase on account of change in the distribution strategy following the GST, which we are expecting to be implemented very soon, and because of this new policies of easing of business, which has already seen some good results, and more people are now going to move their containers by rail.
Okay. What would have been the industry volume growth in Q1? You've delivered 1.8% because some rail freight data suggests that the EXIM volume growth was at 3 to 4%. And if you've grown less than that, does it mean that Concor has lost some market share? Could you throw a light on it?
No, see, there was a marginal dip. Market share is 71.24% exactly in Q1 as against 71.4% last year. So this is a marginal variation, which is basically related to commodity. We were moving a lot of HMS, heavy melting scrap earlier, which was coming to Punjab all the way from ports of Jainport. That has dried up. because of problems in the steel industry, because of abundant availability of raw materials within India. So that is why our tonnage has gone down a bit more in this quarter, but that is not a worrisome feature for us.
All right. Thanks so much, Mr. Gupta, for joining in and giving us all those details. By the way, I think the market has taken note of that guidance cut. It's been cut down to around 7.5%. Volume guidance has been cut. Revenue guidance as well has been cut to around 7.5%. So I don't think the market's taken it very kindly, because if you just pull up the Indian